And I did share a webinar feedback form also in the chat box. If anyone would like to share any of the comments, or if anyone wants to talk, wants me to talk on any other new topics, feel free to post, share your feedback, which will be helpful, to make our future webinars in much more productive way. And thank you very much. Thanks everyone for joining today. So today this is a very important topic. Stop overpaying of taxes. Yes, we all need to pay taxes. Being a resident in America, yes, we need to pay taxes, but we don't have to overpay the taxes. What does it mean? IRS allows so many, IRS has been offering so many incentives, deductions, credits to optimize the taxes. If you don't use all those things, all those available resources, it's your problem. So there are options available. It's up to us whether we want to use it or not. If we don't use those opportunities, IRS will never come and ask you, hey, why you are not using this? So there are options are available. So we should use, optimize that. That's what it means, overpaying of the taxes. We need to pay the taxes, but if there are some strategies available, we should be able to use it. So, and our objective is keep more of what you earn, is what our intention all the time. So we work so hard in a year, we sacrifice our family times, we sacrifice our weekends to generate a dollar, to earn the dollar. So, but if you are paying 30-40% in taxes, then wealth building will take a lot more time. So that's why what our quote is always, keep more of what we earn. So today, whatever I'm sharing, I'm just sharing my knowledge. So sometimes it may applicable, it may not be applicable for your scenarios. Feel free to schedule a meeting with me. As a quick meeting, you can schedule a meeting, or you can talk to an accountant or CPA, ensure that those strategies are applicable for you. If you are hearing me for the first time, this is a very brief about me. My name is Anil Grandi. I am the CEO of AG FinTax. We do also have one more company called Fin Audit CPA, and also Grandi Tax Pros, Grandi Tax Pros LLC. Each entity has a different types of objectives. But as we are based out of Frisco, Dallas, I have 20 plus years of experience in the core tax, finance and accounting field. I worked earlier with Amazon, Starbucks. I have been serving as a Forbes Finance Council member. I have written a lot of articles already. Every year I receive a lot of awards, business excellence awards. We, AG FinTax and the group of companies, it's a one-stop solution for all your money needs. It could be a tax filing, tax planning, CFO services, bookkeeping services, audit services, reviews, SOC audit, SOC 1 audit, SOC 2 audit, mortgage refinancing, or India compliances. I'm also a chartered accountant from India. If you need any guidance on moving the funds from India to here, here to there, that also very helpful. We should be able to help you on that. This is a simple snapshot of what are the services we offer. And apart from me, there is a big team. We have 100 plus employees scattered in multiple different places in US and India. So we are a team of CPAs, chartered accountants, licensed financial advisors, enrolled agents, and many other finance background designatories. And we are experts on the tax planning services. We are experts on sitting with our clients on one-on-one to analyze what happened in our life from the finance perspective, review your last year tax returns, understand what are the gaps are there, and come up with a solution how you can save taxes legally. Till now, our AG FinTax doesn't even have a single audit notice. That's the quality what we maintain. If you look for quality, that's what we are. So our objective is, I always get inspired and motivated by seeing the successful wealth builders. If you look into the wealth builders, Jeff Bezos, Warren Buffett, Donald Trump, they don't pay a lot of taxes. They pay almost zero taxes. But a middle class family like us, we have been paying a lot of taxes. Everyone is paying taxes, no doubt. If anyone is not paying the taxes, you are very lucky. You are having a great team, I should say. So we all paying a lot of taxes, even though whether you're on a W-2, self-employed, or 1099 contractor, or small business owner. Doesn't matter, everyone have been paying taxes. But why I'm sharing the screen here is, this screenshot, this slide, legally it is possible to optimize taxes. Only thing is, if you are not using it, if you are not if you are paying taxes, it means we are not optimizing those strategies. So a lot of times accountants and CPA says that no, this all we can do, you cannot do anything more than this. And what I feel is people get confused with tax evasion and tax avoidance. Tax evasion is finding some illegal ways to save taxes, which we never encourage. But tax avoidance is a legal ways how you save taxes. All the successful people, wealth builders, they use legal ways to save taxes. That's why no one is behind the bars. So legally there are ways are available. So a lot of people, what I noticed when working with thousands of clients for the last so many years, specifically from our Asian community, we are cost conservative. We are very we are not ready to spend a lot of money. But when it is required, we have to spend money. We should not sacrifice long-term profitability for the short-term savings. Yes, there are people available to file your taxes even for $50. So, but what is the value they are bringing in? And it's about what you pay, what you get. If you look for cheaper services, yes, you might be saving $100, $200 now, but you will be paying hundreds of thousands or thousands of dollars or maybe hundreds of $1,000 overpaying of taxes to IRS. So what you pay, what you get, don't ever compromise on building your team. I want to give an example here. I was working for full-time in Amazon. In Amazon, there is a big team of tax professionals, hundreds of professionals who work on how to optimize taxes for Amazon. So what I meant to say, you have to spend money, you have to invest money, or you have to build your team to really save the money. Like example, and also I want to say one more thing. Tax planning is different from tax filing. A regular accountant or CPAs, they file taxes, whatever the numbers you give, they file taxes. But legally, if you can do a proper planning, it is possible to save taxes. And after reviewing all these successful millionaires or billionaires or wealth builders, they are successful because they are able to build a strong supporting team for them. So if you see those successful people, they are not financial experts, but still they are able to do it because they have the team who can guide them, who can mentor them. So in our life, 3 people are very important: doctors, attorneys, and financial advisors. You cannot compromise on that. Get the best out of all available resources. That is how you see the value on your investments. And you may say that, hey Anil, I have been working with an accountant or CPA for quite some time. How many years you work or how close he is doesn't matter. Is he bringing the value or not? I strongly personally feel that every one of you, whether you work with us or not, we believe that we need to work. Every taxpayer has to meet their accountants twice a year. One at the time of filing taxes, one at the time of review. So for the last year, we won't be able to do much, but at least for this year onwards, let's plan proactively. That's how the planning happens. Without planning, if you are not doing any planning for the last so many years, no doubt you have been overpaying of taxes to IRS for so many years. I want to give a typical example for easy reference purpose. I took some higher numbers because these days most of our Indian community guys also making a lot of very good decent size of money. I want to take a very good example. Rounded numbers I took for easy reference. On average, if a person is making on W2 for $400,000 and a business income around $600,000, for a $1 million of income, around 40% is going out as taxes. Whether if you are living in Texas state, you don't have the state taxes, but if you are living in California, New Jersey, New York, any other states, you may be having a state taxes also. On average, people pay state taxes 5 to 13%. Altogether, on average, for every dollar we earn, we have been paying 30 to 40% as taxes. Imagine if you can find a way how you can save the money, whatever money you are paying to IRS, if you can find a legal way to keep that money with you, and if you can just invest that money, you can build millions of dollars incremental wealth by the time of retirement. This is the power of tax planning. And if you don't do the tax planning, what I say is you are missing an opportunity to build a wealth. Yes, if you are on W2, you don't even have a pain when you pay taxes, because every month tax gets deducted from your paycheck month on month. You are used to after tax money. But when you file taxes, you may not be paying a lot of taxes because a lot of taxes are already paid. So you may not have the pain. But you need to open up your eyes and see how much taxes actually you are paying. Was it a $50,000, $100,000, couple of hundreds of $1,000s? You need to find those things and find a way how you can keep that money. And the money, whatever you're keeping, if you can invest that money, instead of paying 50,000, 100,000 to IRS, if you can find a way, that money can be used for retirement planning, kids education planning, maybe buying some investment properties, maybe real estate opportunities, whatever it is. But you have to stop leaking the money. So there are ways to save. And also I say that tax planning, and actually someone messaged me yesterday, Anil, tax season is over, why you are doing this webinar now? I personally believe that tax planning should be year-round exercise. If you are thinking about taxes just only at the time of filing taxes, then you are not going in the right direction. It's our hard-earned money. You need to think about taxes throughout the year. So at least past is past, at least start planning in advance from now for the year 2026. So this is going to change how you think about wealth. And also, when you plan in advance, there are three important things you can achieve. One, peace of mind. You don't have the lot of stress when you pay taxes. So you plan in advance, you have peace of mind. You know exactly how much taxes you are going to pay approximately, and you are ready to pay all those taxes. When you file your taxes, you don't carry that heavy pain of thousands of dollars payment to IRS and bigger savings. So if you can plan in advance, the savings, whatever savings you are doing, that will result in positive cash flow in your pocket. Instead of paying to IRS, think once, when you are filing taxes, how much taxes you paid. You might have paid maybe $50,000. Think once, the $50,000, if you can keep the money with you, how much money, how it would be helpful. And wealth growth. And also, if the money, the 50,000, whatever you're saving now, that could be reinvested and built wealth over the period, and it could be a legacy what you are creating. And why people in general overpay taxes. I want to give a very high level of why people pay a lot of taxes. First, treating tax filing as once a year task. If you are thinking about taxes only at the time of filing taxes, definitely you are overpaying the taxes. Then missing deductions. IRS has thousands of deductions which are allowed to deduct, but what is applicable for you need to find out. So there are so many strategies are available, like example, child tax credit, education credit, and also harvesting capital loss. Like example, you have a capital gain, whenever the market is down, you can sell the stock and you can book the losses. So like playing the game with the capital gain, capital losses. So harvesting capital losses, R&D tax credit. These days, I know many of us have been starting startup companies, AI companies, or maybe one idea. If you are doing any startup, if you are doing any innovation, if you are doing any innovation, like example, you are doing a real estate construction, if you are doing any innovation of any process, you may be eligible for R&D tax credits. If you are running a restaurant, if you are trying to innovate any recipe, you are eligible for R&D tax credit. But R&D tax credits, regular accountants won't be able to do it. It's a specialized knowledge is required. Like example, if you go to the general physician, if a bypass surgery has to be done, a cardiologist has to come in. So like that, R&D tax credit is a separate specialized area. Then section, and also available deductions. If you can go and start investing in the real estate or otherwise investing in some equipment, lot of tax planning opportunities or tax deductions are available, depreciation opportunities are available. If you don't use all those things, you miss it. And also using a wrong entity structure. Like example, beginning of the call, someone was asking me, shall I start an S corporation? What is the right entity structure? You need to figure it out. LLC, partnership, S corporation, C corporation, or sole proprietor. So what should be the right entity structure you should have to run your business? If you don't have a proper plan, like example, the same guy, I think Lakshman, I think was asking me in the beginning of this session. So he's talking about S corporation. S corporation can help you to save 15.3% social security taxes. But if you don't have S corporation, if you're a real estate agent, if you're a financial advisor, if you're an insurance agent, most of the scenarios you get 1099s on your individual name. In those circumstances, how do you structure your entity like an S corporation? It's a planning, a tax planning is required. So like that, what type of entity you choose will decide how much taxes you are going to pay. And and also not leveraging retirement and investment based tax tools. We have so many retirement options in America. The people on average American don't save money for the long term. So what IRS says, the IRS says, come on, I am giving tax incentives for you guys. Come and save money for your future and enjoy the tax benefits. Unfortunately, American residents, most of the American citizens, they are not optimizing it. When you come into the retirement planning, there are so many opportunities are there, so many options are there, but we may not have time to go through every strategy is applicable. But what I'm trying to say here, optimize your retirement. Investment based tax tools. In general, if we have some $20,000, what you do, we invest either in the stock market or real estate. How much taxes you are going to save? Zero. But if you save $20,000, if you're investing in 401k, you are saving 30% in taxes on average. So on top of that, again, the stock market will continue to grow when you invest in 401k, through 401k. So, but if you don't take those decisions, you are not optimizing investment-based tax saving opportunity, you are not optimizing it. And also regular like HSA, health savings accounts, it is a very popular one. I am not going through all the details in this webinar. Health savings, I don't think any webinars which I complete in general about Roth IRA and HSAs. Those are the great tax planning tools. Everyone should have HSA account if you are eligible, and we should have Roth IRA. Everyone is eligible for that. You need to work around it. And also 529 plans or charitable givings. A government even encourages a lot of charitable initiatives. If you are doing any donations to charity, you get a tax deduction on that. There are so many strategies can be structured around the charitable. So there are opportunities available. But if you don't use it, you end up paying taxes. So, and use these strategies. So all the strategies we should implement right now. This is the right time for you. Now you filed your taxes. Now you have around 8 months of time for you to explore all these opportunities and understand what is right for you, or work with an accountant or CPA to ensure what is relevant for you and implement those strategies. Then there are so many opportunities available in one big beautiful bill. If you don't optimize it, then also you are missing an opportunity to save taxes. Like example, I will tell you, car loan interest. If you are buying a new car which is assembled in America, you can claim $10,000 deductions. Like example, we all buy the car, but if you don't claim it, you lose it. So you have to claim it. So your accountant should know it. Otherwise, you should know it so that you can ensure that your accountant is working in line with it. So $10,000 you can claim as a deduction even though you are on W-2. Salt is state and local taxes, which I have separate slide on that, which I'll cover it. And bonus depreciations, a beautiful provision in the one big beautiful bill. One big beautiful bill is so beautiful because of, I say that this is one of the reason is bonus depreciation. Earlier, we used to write off any property, the depreciation, we used to claim the depreciation over the lifetime of the asset. 5 years, 10 years, 20 years, 30 years. But now, because of one big beautiful bill, you can enjoy all those depreciations in the year one if the asset lifetime of the asset is less than 20 years. And also standard deductions. Standard deductions have also increased. Senior bonus deduction, senior bonus. If you are 65 years or plus, you have additional 6,000. Sorry guys. Yes, sir. So if you are 65 years or plus, you can even get $6,000 extra tax deduction as a standard deduction. And child tax credit, every child you have $2,200 you can get as a tax credit. And no taxes on the tips, no taxes on overtime up to $25,000. These all are strategies available. You need to find a way how you can divert or convert your income or rebalancing your income, rebalancing your assets into these, meeting these criteria and enjoy those tax deductions. And Trump accounts, this year, this is one of the great initiative taken by our Trump. We can open a Trump account for our kids if the kids are under 18 years, and we can contribute up to $5,000 for every kid. And even employers can also contribute up to $2,500. Like I think Chase already sent an email to all employees. Morgan Stanley, Chase employees. Chase already sent an email to all their employees saying that they are offering this. That means I think they might be doing some matching up to $2,500. They are going to match. I think so. And employees can contribute $2,500. So up to $5,000 every year you can contribute to your kids up to 18 years. After 18 years, kids can withdraw this money either for their business, they can start a business, they can buy a home, or they can even use for qualified education expenses. As long as they are withdrawing money for these expenses, for these qualified expenses, it is good. Or otherwise, it can continue to in the long run as a traditional IRA. That means whenever you withdraw this money, you need to pay taxes. So this is one of the great tool. I recommend everyone to consider this. And how to open this Trump account? You should have submitted a request to open this account through your tax filing. So when you are filing your taxes, you should have done it already. If you have not done it, then right now there is also saying that you can also visit trumpaccount.gov website, and there is a form available. You can even submit through that form also now. And state and local taxes. If you were earlier, we were able to, if you are filing an itemized tax return, we were able to claim state taxes and property taxes to the maximum of $10,000. Like example, if you are living in Texas like me, we have heavy property taxes. If you are living in California, you have heavy state taxes. So whatever all these taxes together, we were able to claim only up to $10,000 if you are filing itemized. Now it is increased to $40,000. This is a great provision from the $40,400 from this year 2024. But condition, your total married filing joint modified adjusted gross income should be less than $500,000. So if your income is higher than $500,000, you need to find a way legally how you can bring it down to less than $500,000 so that you can enjoy this $40,000 in as a deduction. It is practically possible. Like example, last year I remember one of the client from California, they reached out around in August and September, and they said they had income of $800,000. But with a lot of tax planning strategies, we are able to pull it down their income to less than $500,000. So there are strategies available to bring it down the total income. And 529 plan now we have a lot more flexibility. So if you have not started 529 accounts for your kids, please do it, because after holding for 15 years, if you are not using the money for 529 account for your kids, you can roll over this money to Roth IRA account up to $35,000. This is a great way. I strongly recommend everyone at least to open this account, contribute at least $100 per month per kid. That's what my minimum I say that, so that you are optimizing all the tax benefits. Then one big beautiful bill also introduced For the real estate, if you are, everyone should have, I have done so many sessions on real estate tax planning strategies, why people has to invest in the real estate. I am not real estate agent, I am not selling anything in the real estate, but still this is a great strategy which I want to say. We can, in one big beautiful bill, there are so many tax advantages for the real estate investors. And if you are having any business, or if you are having any self-employed business, or maybe a doctor's clinic, or maybe a small manufacturing plant, or you are running a small kitchen at your home, if you are buying any equipment or you are running a hotel, if you are buying any equipment up to $4 million, it can be written off in the year one. So there are some different conditions are there, but under section 179, if you're buying any capital, if you're doing any capital investments to buy any equipment up to $4 million, if you're running a self-employed business, definitely you should consider this. And bonus depreciation, as I was mentioning earlier, if the lifetime of the asset is less than 20 years, you can enjoy the tax deductions 100% in the year one. Anil, how does this help? Now, what happens? Considering all these benefits, there are funds have come up, which I'm going to talk about in the next slides. Bonus depreciation. If you're running a small business, if you're a 1099 contractor like Lakshman, or maybe if you're a real estate agent or financial advisor, whatever it is, you can buy a vehicle which is more than 6,000 pounds and enjoy 100% tax deductions in the year one. So a great way to optimize your taxes. So please, if you are planning to buy a car, try to get it more than 6,000 pounds so that you can enjoy the benefits. Now these are the opportunities right now. These are the strategies individual level. Now, based on these strategies, there are investment opportunities opened up. So tax smart investments. There are so many tax planning opportunities are available. So different funds are available, like car wash fund, gas station fund, or otherwise convenience fund, where you can invest, enjoy the depreciation. Right now we are associated with few of the fund sponsors, where we have been working with them. If you are looking to any investments, you should consider definitely, because right now you have paid a lot of taxes. Now what, even you are on a W2, even you are on a self-employed, even you are a 1099 contractor, you can schedule a meeting with me. I'm happy to give a walkthrough of this. How does it work? Like example, if you are investing maybe $50,000, you would be able to get 2 times of your investment as a negative K1. 2 times. If you are investing $50,000, you could be able to get $100,000 as a negative K1. So which can adjust with your business incomes or your investment incomes. So there are different criteria are there. You need to have an active role. There are different rules are there, which if anyone wants to schedule a meeting, I'm happy to give a walkthrough. But there are some bonuses they are giving if you are investing before June 1st. So in the next 1 month, anyway you have been paying taxes. So this year, if we can start investing the money, whatever the money you are earning, if you can reinvest somewhere, it opens up the doors to save taxes. So there are a lot of opportunities are available. So considering the bonus depreciation, but it is very important with whom we are working. It's because we may not able to manage the funds very actively. There are, as we all know, there are so many funds are available in the public, but which fund to pick? What is the track record? What is the success rate? Did anyone invested earlier with them? Are there any issues with them? These all issues has to be considered. Parameters has to be considered before investing your dollar in anywhere. So there are different strategies. There are so many opportunities are there. So there are few, but if anyone is interested, schedule a meeting with me. I will give a walkthrough. And also oil and gas. Oil and gas also, there are a lot of opportunities are available in oil and gas investments, where there is an advanced tax planning strategies are available. And also capital gains. If you have any capital gains this year, you can reinvest your capital gain amount into an opportunity zone funds, where you can defer your capital gains tax liability. If any one of you, then opportunity zones 2.0 is launching. If you are getting any capital gains after July 8th, 2026, you would be eligible to invest in opportunity zone 2.0, which is much more advanced, much more beneficial than current tax opportunity zone funds. So when to exit, like example, if you have some stocks already which is highly appreciated already, rather than selling the stock now, I wanted to wait till July so that you can sell and you can reinvest into opportunity zone funds. There are so many funds are available. If anyone wants to talk, please schedule a meeting with me. And entity structuring. So as there are different types of entities we have: LLC, S corp, C corp, partnerships, or 1099, 1065, or sole proprietor. Each entity has a different purpose. You need to find the way, you need to find what is right. How do you optimize it? What is your long-term plan? Do you want to exit from the business? Do you want to depend on that business? Like example, AZ FinTax. I live on this. This is my bread and butter. I live on this business. So then it has to be structured in a different way. If I'm developing a product in the side, which I might be able to exit at a few years later, so then I need to structure those entities in a different way. Or if I don't have much business at all, then I may not even require an LLC. So these all are very important parameters to consider. What is right for you? You need to ensure that you have the right entity structure. And also tax smart retirement opportunities. So I strongly, this is 24. I strongly recommend everyone to contribute to 401k. Don't ignore your 401k. Yes, there are other alternative opportunities are there, but 401k is also good, because if you can invest in contribute your 401k, it's a direct flat 30% tax savings. So, but of course, you may say that, Anil, my money gets locked. There is no job guarantee for us at all. Whenever you quit your job, that entire money, your 401k balance, is available. There are so many opportunities are available. How to use your rollover 401ks, previous 401ks. If you have any questions, schedule a meeting with me. It's a direct my barcode. You can schedule a meeting. We can talk. And backdoor Roth IRAs. I strongly recommend everyone to contribute to the IRA. If we have less than $245,000, you can directly contribute to the Roth IRA. If your income is more, you can go for backdoor, where you can have two types of account: traditional IRA, Roth IRA. Contribute the traditional IRA, roll it over to the Roth IRA. So a lot of planning is required. So please look into this and do it. And also Roth conversion. If you think that your income will continue to grow up in the future, it could be an opportunity for you to convert your existing rollover 401ks to the Roth IRA. But before you do this, there's a lot of tax implications are there. My recommendation is talk to your accountant or CPA. There are so many opportunities are available right now with the previous 401ks balances. Okay, at least talk to me or talk to your accountant. Then one of my favorite topic, you being an individual. Anil, I am on W2. What else I can do to save taxes? Start a business. It could be a self-employed 1099 contractor or a small side gig. If you have the business, you can turn your passion into the business. There are so many opportunities are there. In America is a land of opportunities. If you don't optimize it, you are missing it. So you can become any business owner. You can become a financial advisor. You can become a real estate agent. You can become a photographer. You can become even a chef at your home. Or there are so many opportunities are there. But all the tax saving opportunities are opens up only when you are a business owner or self-employed. If you are in W2, you can't even claim your $30 monthly mobile bill against your W2 income. But when you are a business owner, even you go to the Las Vegas or California, or you can travel wherever you are, but as long as there is a business requirement, if you can demonstrate there is a business need, maybe a networking opportunity, maybe attending some seminars, maybe attending some trainings, or maybe meeting a new prospects, or maybe meeting a client. If you can show a business need, all those expenses are also tax deductible if you are a business owner. So I strongly want everyone to have a business. In the last few years, I have been encouraging, maybe right now 1,000 plus business owners might have got started their businesses because of my guidance on this, how they can save taxes, what they can do. And if you are a small business owner, if you want to have some, if you want to know what is the do's and don'ts, you can send an email to us. You can see all the contacts. I can send what is a do's and don'ts of being a self-employed or small business owner. I want every one of you, as long as you are a citizen or a green card holder, I want every one of you to have some business in the side, because it has tax breaks. And when you are a business owner, you can claim lot of expenses, travel, meals, or healthcare expenses, so any technology expenses, education expenses, or any research expenses. Your advisor, tax advisor, wealth advisor, not wealth advisor, tax advisors, or attorneys. Okay, all these expenses are tax deductible only if you are a business owner. You have 8 months time for this year. Start exploring how you can become a business owner. You can even do a free consultation. You can become a freelancer, but have some business in the side. Yes, when you have the business, you need to file as a Schedule C, or you might need to file a separate tax return. There are some additional expenses are there, but worth of incurring those additional extra few hundreds of dollars every year to manage your business. But be a business owner. And capital gains, and because we are, most of us, what we do, we invest either in the stock market or real estate. If you are investing in stock market, you have enough time for this year. In the 8 months, we have time to work on tax loss harvesting. That means whenever the market is down, try to sell if there are any stocks which are loss making, so that those losses can be adjusted with any capital gains. Not only this year, if you are not able to use this year, it will be carry over to the future periods. There is no time limit. Tax loss harvesting is a great way how you can optimize your capital gains. And if you are a primary home, if you lived in primary home for the 2 years in the last 5 years, you can get a tax deduction of up to $500, 500,000. You don't need to pay taxes at all. Then 1031 exchange. So if you are having a real estate property, don't pay taxes by reinvesting it. So don't go and reinvest your real estate sale proceeds to buy some other 1031 exchange. If anyone has any questions on the 1031, feel free to ask me, because we don't have much time. I'm expediting it. And qualified opportunity zones, as I was talking about, if you have any capital gains, you have time, 6 months time to reinvest and defer your tax liabilities. So if you have this year, this is very important, planning for this year. If you are having any capital gains after July 8th, you will be eligible to invest in opportunity zones 2.0. That means 6 months, which will get into the next year, January. So great way to defer your capital gain taxes. There are so many funds are available again on this. So if anyone has any capital gains, reach out to me. I'm happy to guide. And R&D tax credits. R&D, if you are doing any innovation, you are eligible for the R&D tax credits. If you are having any business, and people think R&Ds are available only for IT product companies, but it is available for many more industries. You may be doing a food manufacturing, you might be in a distribution and logistics, you might be in automotive industry, you might be running a biotechnology devices, or anything. If you are doing any innovation, you are eligible for R&D. Right now, we are helping few real estate guys who are doing development. For every dollar you are investing, 10 cents of every dollar, you will get it back as a tax credit from the IRS. So there are many ways are there. I am not going through all. And at the end, what my intention is, we can achieve bigger success. We can build the wealth only by having a strong team. That's why we, AZ FinTax, we're happy to sit with you, work with you, advise you, guide you, mentor you, and be part of your financial journey. And what actions you can consider we can take now. So at AZ FinTax, for all our tax planning clients, not for tax filing, tax planning clients, we do tax and financial health checkup. For individuals, we do basic tax planning is included. And for the business owners, we offer tax planning as a service, a custom tax planning and we also take care of entire execution also. And we are a wealth strategist. We help you on how you can build the wealth. And on the tax planning, if you are a self-employed, 1099 contractor or business owner, definitely tax planning is required. Even you are on W2, if you are having more than 200,000, or I should say, if you are having more than $300,000 accredited investors, lot of tax planning opportunities are available. Tax smart investment opportunities are available. Don't miss those opportunities. If you are having more than $500,000 of income, $300,000 of income, so many opportunities are there. If your income is less than 200 or 300,000, less than $300,000, the opportunity to save taxes. Sorry. So if your incomes are less than $300,000, the opportunity to save taxes are limited. If your income is more than $300,000, even though you are on W2 or self-employed, 1099 contractor, lot more opportunities are available. So if anyone is signing up for our services, by scheduling a meeting with me, then they are going to get a 10% discount on our tax planning services. We are not only tax planning, we do bookkeeping, advisory, and we do also have a fin audit. CPS LLC is also our company, and where we offer audits, reviews, SOC audits also we do, and R&D tax credits, estate planning, wealth planning, financial management, financial planning, all those, and also company formations. So we do a lot of things. Under tax planning is not a straightforward, and if you're looking for any of the services, we are happy to help you. There are few questions. Okay, there are few questions are there. I will take up those questions, and I can also allow a couple of people to unmute and ask. First, let me answer the questions in the chat box. Yes, Santosh, we offer tax planning services. That's what our expertise. We are not just general physicians, we are specialized physicians also. Are we allowed to purchase a property in general, a house, primary home, or investment property on H1B or any other visa, green card? Okay, yes, H1B visa holders can buy real estate properties. They can have a passive income. So if you want to build a real estate portfolio, please do it, Yadgiri, so you don't need to wait for your green card. And I did share my webinar feedback review. Please please take a 30-second, 1 minute to share your opinion. It will be directly reviewed by me. I will see what corrections are to be done. Whether am I talking fast? Do I need to go slow? Am I talking a lot of content, or I need to shorten my content, or I need to talk a bit more? We need to increase our webinar timings, or is this really helping? Is these webinars are helping you or not? Or you are looking for any new topics? So please share your feedback, and it would be helpful for us to make future webinars in a much more productive way. Okay, so then, okay, there are a lot of questions. Okay, Mohan, how to manage RSU? Is it better to sell as they get allotted? Mohan, very good question. We say, I work for Amazon. I also got a lot of RSUs earlier. So what I say, we should always mitigate our risk. Whenever we get RSUs, at least 25 to 40% I want to sell and reinvest this money somewhere, so that you will not have a capital gains on that. Like example, today it is assigned to us. You can sell today or tomorrow, soon, immediately. So you will not be having any capital gains, and also you can reinvest. You are diversifying your investments into other categories, or you can invest in some other company investment in other stock, or you can diversify into real estate. So my recommendation, yes, you can do it, because market is very much volatile. You need to ensure that you are properly protected after all your efforts. If market crashes, if a world war comes, what happens to your stock market portfolio? Can you guarantee that world war will not be coming in the next 6 months or 1 year? No guarantee. Or in the next 5 years, 10 years? No guarantee. I always wanted to protect some part of income. That is why in 401k, many of my clients, we do what we do for our clients. If they have any rollover 401ks, we sit with them and ensure that they are protecting their number, their wealth, so that even the market is down, you don't need to lose money. So there are different concepts are there: income annuity, or growth annuity, or fixed annuities. The concepts are there. If anyone has any questions, feel free to send an email or schedule a meeting with me. I'm happy to do it. How can I schedule a call with you specifically for tax planning? I think I shared my link. Okay, I shared in all the pages. I am sharing it here again. Feel free to schedule a meeting with me. I'm happy to guide you. I'm sharing the link again. So then, what is a restricted stock unit? RSU means RSU's restricted stock unit. So when you work for corporates like Amazon, Microsoft, you get a lot of RSUs. Can we get a recording of this? Santosh, no Santosh, we are not sharing the recording. We want to do a couple of more webinars. Yes, do we need to pay quarterly advance tax towards federal tax for the LLC in Texas? This is our second year in LLC, hence checking the requirement. Yes, Sam. For the W2 employees, tax gets deducted every month from the paycheck. But for the business owners, we have to pay taxes proactively every quarter to IRS. So yes, answering to your question, Sam, we need to pay estimated taxes every quarter to IRS. Is realtor bonus taxable even though realtor didn't? Yes, realtor bonus taxable even though realtor didn't issue 1099 form. Okay, so Pawan, a lot of people what they do, if I assume when you bought a house, you are getting some bonus back, the commission back to you. If that is the case, you don't need to pay taxes whether you get a 1099 or not. If any accountant or CPA is asking you to pay taxes, come to us. We are happy to help you. So we don't need to pay taxes on the real estate bonus at all.
Okay, and we don't report also, right?
Sorry?
We don't need to report also that income, whatever.
No, we have to report it. We will adjust with our value of the asset.
Oh, okay.
Yeah.
Okay.
Yeah. Okay. So good. Okay. So can you explain more about car wash and convenience store fund? Jitender, what happens if you understand all the entire session? There are so many strategies available. A lot of tax benefits are available for the one big beautiful bill. Based on that, there are funds they created. What a few people, they are buying some bunch of car wash stations, bunch of convenience stores, bunch of gas stations. Like that, they are buying and they are distributing those depreciations to the investors. If you can be an active investor there, okay. So there is a lot of documentation required for the IRS, which I can talk offline. But then you will become an investor in that business. You will be the shareholder in that business, and you get a business losses. Those losses can adjusted with your W2 income or business income. But to invest in these funds, you should be an accredited investor. If anyone is interested on that, please schedule a meeting with me. I'm happy to guide with them. Good. Okay, Nanda. So I am Nanda. For W2 income person, can one contribute after tax to the traditional 401k and then roll it over to the after tax portion to the Roth IRA? Answer is yes. This is a mega backdoor Roth IRA, one of the great beautiful strategy being offered by only corporate companies, because it's very expensive to manage it. So yes, mega backdoor is a great product. If you are working for any corporates, Oracle, Facebook, Amazon, Microsoft, all these companies offer mega backdoor Roth IRAs. Please contribute to that. Manu, if I am part of HUF in India, is that considered as a partnership in US from the tax perspective, and I need to account for it? If HUF receives rent and has 2 members, then my rental amount will be 50% and it needs to be reported with the US tax return. Manu, yes, your answer is right. You are considered as a partnership shareholder of that investment, and you need to disclose your real estate rental income, and you can also claim depreciation against that rental income. So you won't be paying a lot of taxes, but you have to report all those things. It's a mandatory, it is not an optional, Manu.
Anil garu, on 401k question, I
Yes.
meant to say if my company doesn't offer mega backdoor,
There is
it's
no.
only traditional 401k.
Yeah. No, then we cannot do, sir. We company has to offer mega backdoor. Otherwise,
Okay.
it's not possible.
Okay.
Okay. So with car wash and convenience, is the deduction 2x or more? Answer is yes. They are giving 2 plus funds. Then Naresh, for a W2 income persons, what are the deductions that can be claimed? Good question, Naresh. Because I'm not going through the concept of our webinar today is to get to an awareness what all can be done or high level what can be done rather than going to every strategy. There are hundreds of strategies are available, but every strategy won't be able, I won't be able to cover it. So but anyway, for Naresh, when you, if you are in W2, you can go for standard ones. HSA, 401k, IRA are available. Charitable deductions are possible. Then you can, if your income is more than $300,000, then you can go for a tax smart investment opportunities. So Santosh, for people whose lease cars can be have, okay, no. If you take the lease car, the depreciation, the lessor takes it. So, but if you are taking the lease, if you are a business owner, you can claim your lease payments every month as an expense, but otherwise, lessor will enjoy the tax benefits. Arun. Arun, for these car wash fund contribution, what return are they offering beyond tax reduction option? Arun, you can schedule a meeting with me. I'm happy to give a walkthrough. Yes, they are going to give a decent size of rate of return, but I want to go through on one-on-one rather than talking about this because I am not offering it. I am only trying to connect the dots. Some other guys are there. So where we partnered and they are doing it, I can help one-on-one, Arun. You can schedule a meeting with me. Ashok, today I am doing backdoor Ratha area. Do you also recommend to check mega backdoor? How do we understand if my company supports mega backdoor? Ashok, you can directly check your HR, employee benefits, or you can call to customer service of the custodian, like example Vanguard, Fidelity, Charles Schwab. You can call them wherever you have your 401k. They will tell you whether you are eligible for the mega backdoor or not. Yeah, thank you. Okay, anyone have any questions? I can take couple of questions. Lakshman, you can unmute. Yeah.
I have a question about the backdoor Roth, right? So, if for business owners, can they do backdoor Roth in addition to SEP IRA, or other business owners' retirement plans?
Yes, backdoor IRA, anyone can do Roth IRA, backdoor Roth IRA. If your income is more than $245,000, anyone can directly open your accounts in the Vanguard and you can do the backdoor Roth IRA. And if you are a business owner, Lakshman, as we are talking initially in the beginning of the session, being a business owner, self-employed, there are so many opportunities are available. SEP IRA, simple IRA, solo 401k, defined benefit plan, cash balance plan. There are different opportunities are available. So you can schedule a meeting with me. I'm happy to guide you. But if you need to sign up for a tax planning, I will guide you. But yes, you can. But it is possible, Lakshman. You can go for any of these strategies.
Thank you.
Yeah. Okay. So Manu is asking: Are we are investing in mutual funds in India cumbersome from reporting and taxation perspective being PFIC, and that is the reason why it is discouraged? Manu, 100% right. We never encourage anyone to have mutual fund investments in India. US doesn't treat well because you need to pay taxes on unrealized gains also, which is very bad. Even you are not selling your mutual funds in India, still you have to pay taxes here. So we never, because American government wants to encourage investments in US so that they discourage investing in some other mutual funds in the worldwide. So Is the gratuity and PF withdrawal in India taxable in US? Answer is yes, Pawan. You have to pay taxes in US. Do we need to FBAR when we have mutual fund? Of course, yes. If your balance is more than $10,000, then yes, you need to have an FBAR. Thank you. Thanks for informative session. Thank you very much. Good. I don't see any other questions.
One question.
Yes.
If you have invested money in India in one of the banks and you're making compound interest, you are not taking it out, but you still have to declare that interest as income?
No need. So, but you have to file FBAR, and you have two options. Either you can choose interest on accrual or interest on receipt basis. You can go for interest on receipt basis, so you don't need to worry. It's on accrual basis. If they are depositing the interest every month or every year, then you have to report it to you.
FD.
Thank you.
Yeah. Okay.
Question.
Amrut, I'm sorry we are not able to share the recording. We encourage everyone to join because people are not focusing on this webinars when I'm sharing the recording. But we will be doing many more webinars. I am planning one more. Actually, this weekend we have one webinar on business owners. So again, this Sunday morning, 11 o'clock, if you are a self-employed or business owner, we encourage you to join that meeting also on this Sunday. Okay. Yeah. Okay, then. Thank you very much. Thanks everyone for joining. If anyone,
Anil, can you share the link for business owners planning?
I think wherever you got this link, same where. How did you get join? How did you join?
Email. I got the email.
In the same email, go and check. There is a business owners link also.
Okay.
It should be there. Yeah. So thank you very much, and we appreciate any of your feedback on the Google. Google, you can visit our website and you can leave a feedback, or you can share a feedback on the link what we shared also. And thank you very much, and I appreciate. Thank you. Bye.